here you guys are with $100,000 of investment assets. And so one of the questions we like to ask our guests here is, if you are familiar with our content, you were telling us before how both of you are huge fans of the Monday Guy Show. Where would you say you are in the financial order of operations? And if you're not familiar, this is like a 9-step process of what to do with your next dollar.
I even wrote a book.
He literally wrote the book on this. Where would you guys say you are in the financial order of operations?
I think step 4. That's what we're currently working on.
Yeah, definitely step 4.
Step 4, building up an emergency.
That's a lot of confidence. I love that you have this confidence about it.
We're working on it.
But yet, in a minute, we're going to pull up what you're actually doing.
We might have ping-ponged a little bit in the steps.
More ping pong.
That's going to come up more.
There we go.
Well, the accountability of this is all going to come together.
Yes.
We're going to see, man, are we really? Because you are, by the way, we would agree you are indeed in step 4.
We should be in step 4.
But Bo, I would like for you, can you walk our audience, Hannah, Daniel, through what are they actually doing with their money?
Yeah, so when we look at your cash holding, remember, again, you said that you have about $5,000 in cash right now across your current cash holding accounts. Well, you know that our goal for a fully funded emergency fund is somewhere between 3 to 6 months of living expenses. So I'm going to pause here for a moment. Would $5,000 cover 3 to 6 months of living expenses for you guys?
Absolutely not.
No. So
No.
it is wonderful that you recognize,
That's probably 1 month.
we are
Yes.
in step 4, right? But when we look at your saving strategy, when we look at how you've been accumulating and how you've been building dollars, this is what we see right now. Right now, Daniel, you're putting about $5,200 a year into your Roth. I know you guys do a lot of weekly saving, but we actually totaled it up about $5,200 a year in your Roth. Hannah, you're doing about $5,200 in your Roth. Daniel, your 401k has about 5% going into it. You get a 5% match. I'm assuming you're maxing it out to get the match. You do have money going into your high yield savings account. So that is the step 4 part, building that of about $3,600. And then Hannah, you're required to put money into your pension, right? So you have to put 6% or almost a little over $2,800 into your pension. And by the way, that puts you at a 22% savings rate, which sounds awesome, right?
And that's probably understated because it doesn't even include the TRS.
That's right.
Has some funding going in.
That's
it's
right.
it's much harder to determine what that number is because of the way they calculate it. But see, y'all are doing great.
So we love seeing this, and that sounds awesome, except for when we asked you, where are you in the financial order of operations? Everyone at this table agreed that you are solidly in step 4. And yet right now I see that you have almost or a little over $10,000 a year going into Roth IRAs. Do you know where Roth IRAs fall in the financial order of operations?
After step 4.
After step 4. It's actually the immediate next step. It's step 5. And what's happened so far is, I imagine, because you don't have debt, I didn't see credit card debt, I didn't see that kind of stuff. You've not had an emergency happen that caused you to have to pay for it, that caused things to run out. But that doesn't mean that it's not going to happen. So right now, you guys are living in sort of this uncertain, precarious thing. So long as everything keeps working, it's okay. But as soon as something goes awry, as soon as that unknown expense happens, you guys are going to be in a rough spot.
I would like to point to, I looked at your bank statement and I was trying to figure out all the money lines because it was $100 galore. I mean, so is this you, Daniel? Or is this automated that all these hundreds of dollars are going into all these different accounts? Or is this you like every time you get a little extra cash, you're in there and you're like, send them another $100? What is it? Is it automated or is it
automated?
Manual? It is automated.
It's automated for both of us on Mondays. We just typically we.
I mean, because it was a lot of money line. By the way, I have a sickness myself. I mean, I dollar cost average every week with my investments. It really scratches the itch. But when I looked at your statements, a curiosity, a question mark formed where I was like, based upon how active I see these money line investments going into all these different accounts, do you dislike cash? Is there a mindset thing? No, I don't. I'm not saying that to be funny. I'm just trying to, because you're in step 4, but I see this behavior where you're creating this automation that's leaning it out as much as possible to get the money into the other accounts. What do you feel about cash? Do you feel that's wasteful because it's not working? Give us some insight.
I don't think it's wasteful per se. I think kind of like you said, maybe we haven't had the unknown happen. We did kind of recently, since having these conversations and whatnot, we had our washer machine broke on us. So that was an unknown.
Yeah.
That was fun.
It's not cheap either, right?
No.
Not at
that's
all.
an expense you don't count on that happens.
I think we've just kind of been blessed that we haven't had something like that happen. We both known through this whole process, this is kind of thing we need to start doing is really protecting
Priorities.
ourselves, really for our girls too. I mean, just not being so thin on the cash and whatnot.
Because it does create that, and desperate decisions is what we're trying to protect you from, is because, and by the way, I think anybody who's decent with money and once you understand compounding growth and how your money can work harder than you can, we all immediately fall into this trap of like, well, let's get it in there as fast as possible because you get rewarded for that. But the cautionary tale is that you can't get caught without cash when life happens, because that's back to those desperate decisions where you end up going into credit card debt or you end up just sacrificing or medical issues. There's all kind of things that can come up that can really derail your financial life. And we just prefer, and for you guys, what I think is exciting is that you could correct this pretty quickly. It would not, now the way you're going, this is going to be like an aching pain that's just going to nag you for years. Because your cash reserves is just, it's anemic at how it's growing. But that could be quickly corrected if we actually turn that discipline towards actually correcting this problem.